Hi, and welcome again to another edition of Market Analysis. Today is February the 1st, 2023. I'm Giovanni Benacore, analyst, trader, and operator with Vantage Markets. Markets are pricing a fairy tale Fed ending, and the dream can come true. As Federal Reserve Chairman Jerome Powell prepares to outline his thinking when releasing the first interest rate decision of 2023, markets are counting on last year's aggressive hiking campaign to pause soon and go into reverse later this year. That's a big reason why the Nasdaq is up more than 10% since January 1st. Over the past 3 months, the S&P 500 is up more than 8%. Investors aren't pricing the Fed to perfection. They're pricing in a fairy tale. If the Fed behaves as the market expects and starts to cut rates by the end of the year, it will be because the economy is so weak that it needs a lot of support. In that situation, companies will be having a hard time making money, which can be good for stocks. Alternatively, if the Fed guides the economy to a soft landing, it won't be cutting rates by the end of the year. That will imply that unemployment stays low, which worries the Fed because it gives workers more power to bid up their wages. If the economy remains resilient, the Fed will keep rates higher to ensure inflation stays low in the longer term, even if inflation continues to slow sharply in the short term. And higher interest rates also aren't good for stocks. If nothing else, they dampen risk appetite by making interest bearing investments more attractive. And there's the rub. Stocks are currently priced correctly only if there's both a soft landing and rate cuts by the end of the year. They won't both happen. So, if Powell sounds hawkish today, take him at his word. If he's not, prepare for recession. Either way, maybe it's time to consider selling the stock rally. So, with that being said, the market is poised to open lower. We have opened up a gap up in the Nasdaq. We most likely can come to close that since the momentum is to the downside. How much lower? 12,000 is the psychological support level for the Nasdaq. Then we have also a gap down on the S&P 500 already. So will they come up to close it, or will the market just continue to push lower up towards the 4,000 support level? And then we have a gap down on the Dow. So will the market, since it's already gap down and looking to open lower, how much lower will it open? Will it come down to 33,500, or will it come down to that 33,000 that has been met several times in the past? That we will see. Most likely we are up. Obviously, we're going to be opening down. So the momentum, being the day of interest rates, selling the stock rally, that could be the case. Today it could be a red day. So we have here crude oil. Crude oil is pushing lower to that gap. That gap has already been closed. Okay, so we could probably see a rebound on crude oil and see the RSI is actually flattish and right around the 49 section. Okay, so this could be an indicator that we would open when we open, we'll push the prices higher later on today. As Nat Gas also continues to just creep lower, 250 is the support level for Nat Gas. We are oversold territory, so I wouldn't expect any much more push lower, but to the 250 we'll find some support if not before that. Then we have gold. Gold is yesterday it really did a parabolic movement to the downside. It bounced off the 1900 level. It quickly reversed, and we have opened up right about a small gap up, and that gap has been closed, and so we'll continue to just push to the high, to the upside. 1950 will be our resistance, and we have here silver. Silver is just looking to trade, sideways right around 2350. Continue that will continue throughout the day, and then we have copper. Copper's it up and gap down. Will we come to close it? It kind of kissed the 21-day moving average. It really didn't touch it. It just bounced off about 2 cents before that. Well, we could probably come down towards it and see if we'll come down to $4, just profit taking. As far as the currencies goes, okay, so 110 is the resistance for the euro. 1095 will be the first resistance. Then we have the pound. Pound is looking to really stay sideways. 123.50 is where I'm looking at it, because we have the dollar index opening up, gap down, and we could probably see, if we see this continuation to downside to towards the 101 section, we'll definitely see gold at 1950, silver perhaps trading above 23.50, and then copper staying around that $4.20 marker. And well, in the equities, we most likely will see them drop. All right, so that's what we have so far for you today. Have a fantastic trading day, and I will see you again. Ciao.